Thanks to targeted therapies, biotechnology has made it feasible for foreigners to live an additional 15 years during the past 50 years. In just 20 years, the 5-year survival rate for chronic myeloid leukemia has more than doubled from 31 to 70%. None of these improvements would be possible without advancements in the biotech industry. With gene editing and minimally invasive surgery techniques, the possibilities are endless. But with innovation comes money, controversy, and scrutiny. And at the heart of these issues are the industry's pricing practices. Gut cancer will cost you an average of $42,000 per year, with some treatments costing millions. Biotech has made entrepreneurs and investors incredibly wealthy, but it also has faced its share of challenges, such as criticism from lawmakers and the public over its pricing practices in several cycles of both booms and busts. Currently, the biotech sector is facing its next major challenge with the introduction of new legislation. Finally, the exploitative pricing tactics of the sector are under attack. The aftermath of COVID-19 has left the sector in a deep bear market, and financing for early-stage drug development is drying up. But is this the end of the golden age of biotechnology? The biotechnology industry has had multiple bubbles in the past, beginning with the genomics bubble of the late 1990s, which burst with the dot-com crash. Several blockbuster medications were approved between 2012 and 2014 to revive the industry. However, the drug Gilead Sovaldi for the treatment of hepatitis C, which was licensed in 2013 and made a record-breaking $10 billion in its first year, brought investor interest back to the sector. In 2021, sales of Pfizer's COVID-19 vaccine increased from $0 to $37 billion. Along with developments in immuno-oncology, the discovery of cancer medicines, and encouraging clinical data, the next wave of momentum occurred in 2013. Between 2010 and 2019, the success of Merck and Bristol Myers increased interest in other cancer businesses. Oncology accounted for over 25% of the 378 novel medications approved by the U.S. Food and Drug Administration. A friendly FDA and cheap borrowing rates made it considerably easier for biotech businesses to attract capital in search of bigger returns. In 2011 and 2012, when patents on many significant pharmaceuticals held by giant pharmaceutical firms expired to replace their portfolios, investors were extremely motivated to support biotech startups and were drawn to the more speculative industries. Big Pharma engaged in a massive acquisition binge, paying hefty premiums to purchase promising new pharmaceuticals, hence boosting the sector's returns in 2017. Gilead paid $11.9 billion for Kite Pharma in 2018, and Juno Therapeutics was acquired by Sledge for $9 billion. Both of these companies were developing cancer treatments. Investors reaped the benefits as the Spider SP Biotech ETF, an exchange-traded fund that tracks the performance of the biotech industry, rose 240% between 2012 and 2019. Between 2012 and 2021, the Spider SP Biotech ETF rose nearly 700%, triple that of the S&P 500. However, it was what happened next that really helped investors bring home the bacon. As we all know, the year 2020 brought a global pandemic that sent the entire financial market into a tailspin, including the biotech industry. However, markets quickly rebounded and biotech climbed to new heights. Two significant causes contributed to this quick expansion. The first was the Fed's record injection of capital into the economy, which set the prices of speculative assets such as crypto, tech, and biotech soaring. The second was the success of mRNA-based COVID vaccines, founded in 2010 by Moderna. 2020 through 2021 was arguably even crazier than the dot-com bubble. In 2020, there were 131 biotech IPOs, and in 2021, there were 154, the highest number ever. There were significantly more companies going public than any time in the previous 20 years. Prices also reached eye-popping levels, with the average valuation of the biotech IPOs in 2021 being 63% higher than in 2000. But as with every bubble, it was inevitable that a fall would occur, and it did. The biotech industry reached its peak on February 5th, 2021, and lost nearly half its worth during the following year. Rising interest rates made it more difficult for startups to raise money, which is a serious problem for biotech industry, which relies heavily on investor funding for drug development. It costs an average of $2.6 billion to develop a new medicine, and biotech companies have a difficult time securing this type of funding, especially in this environment. 1 must raise vast sums of money, 2 must spend years creating a treatment, 3 must undergo many clinical studies to obtain FDA approval, and 4 must either go public or be acquired by a huge pharmaceutical company utilizing their market prowess. Before generic competition even joined the market, Big Pharma would often profit from an exclusive 20-year patent to sell these drugs. A few years ago, biotech startups could rely on pharma giants to buy them out. But this is no longer the case. Prior to the market collapse, the biotech industry was significantly outperforming the S&P 500, but after the crash, its 10-year returns are now on par with the S&P 500 again, erasing the advantage of biotech over the broader market. The FDA's Accelerated Approval Program was established in 1992. This program has enabled the early approval of pharmaceuticals that treat critical illnesses such as HIV and cancer. Critics argue that the program has led to a glut of expensive, unproven medications, particularly for cancer. The program reached its peak of criticism in 2021 when the FDA approved the first Alzheimer's drug in nearly 20 years in steps to try and reverse the disease. The FDA can slow down the rate of new approvals, and that's exactly what they're doing now. The industry must navigate a more uncertain future now. After a drug is approved, the business maintains a 20-year patent until other companies can join the market with cheaper generics. Therefore, the cost of drugs continues to be a contentious issue. This provides the firm basically monopoly authority over the drug, allowing them to demand exorbitant costs. In recent years, lawmakers have been putting pressure on the pharmaceutical industry to lower prices, drawing attention to the sky-high cost of prescription in the US, where the government does not regulate drug pricing, and the price of prescription drugs is 2 to 6 times higher than in other countries. Healthcare executives are anxiously awaiting the outcome of the crisis in 2022. Biden signed the Inflation Reduction Act, which has 2 significant effects on the pharmaceutical industry. First, Medicare will have more power to negotiate prices on certain drugs, and second, buyers will be able to receive rebates on drugs that increase at a faster rate than inflation. Drug manufacturers are fighting back, and for years, the pharma industry has successfully resisted legislation on drug pricing. The details are still being finalized, and the first price changes won't take place for at least a year. Analysts at Jefferies Investment Banking anticipate that the legislation might cut the sales of pharmaceutical corporations by $40 billion by 2032. Additionally, the legislation could hinder purchases. Healthcare executives are cautious to invest in novel treatments or buy companies if they are uncertain of their future profits. Nina Kelson, a partner at the venture capital firm Cannon, asserts that the industry has always cried wolf and made the same arguments, such as if you change anything but the piece of legislation, it will decimate the industry. This is not to say that the growth of biotech is over. Rather, it means that investing in biotech may not be as simple as it was in the past decade, with some analysts even predicting a temporary lull. Christopher Raymond of Piper Sandler stated that the smart money is not fleeing the industry, but they are taking a closer look at the companies they are ready to invest in. Are we in a decline prior to biotechnology's historic run? If you like this video, please consider hitting the like button. It really helps us get pushed further through the YouTube algorithm that at times can be quite tough to wrestle with. Additionally, if you like this video and want to see more like it, consider subscribing to the channel. We at Smart Money provide videos like this every single day. Thank you as always for watching. We hope you have a great day.